Good afternoon, everyone. This is Henry Gambell with SimplerOptions.com, and in today's free video I wanted to look at MOMO. So MOMO has had some good momentum, not to play that one out too much, but it is in a nice trend, and one of the things that I was looking at today is that you'll notice that the 8 was crossing back up above the 21, and we've just come back to reclaim the 50-day over the course of the past 3 days as well. These are just some of the moving averages that I like to use as I focus on trading with the trend, and you can also notice that we have a squeeze in play. So a couple of things that come to mind on this, and to some degree it is a position that you could, discuss a couple different ways, because when you look at an options chain, and I'm doing this here through Thinkorswim because I do like the feature that they offer with the current IV percentile, it's just showing you that when implied volatility is as low as it is, you're not necessarily getting the best bang for your buck to come in and try and sell premium. However, I still think that there's an argument to be made for this because it's one of the most straightforward ways to generate a theta positive position, and it's something that I like the idea of potentially selling naked because I don't mind owning shares of this, and I like the idea of working when you have illiquid options, which a bid ask of 40 cents wide on a product like this I would consider to be fairly wide, but you're going to have an easier time getting filled in just a short option as opposed to working a spread. And if this just sits here and trades sideways, which it has been doing around 40, that'll be a lot more forgiving than buying a call. So even though the implied volatility may not have a huge standout there, I like selling puts in every series all the way up into a month out. You go much further than that, and you're not really going to see too much in the way of decay very quickly. You could also argue coming in and buying the call debit spread, doing something like the 38.42. And this is just something else that would be a little bit easier if the underlying sits here and trades sideways, gives you no upside risk, and is trading at a little bit better than a 1-to-1 risk-reward ratio. So there's a couple different ways you can look at it. I think it will be in play during these next couple of weeks because of the squeeze, and it will be on my watch list, so I wanted to share that with y'all. Have a great rest of your evening, and we'll see you at the next free video.